Very good morning, everyone. Charles here, Frgnt Daily Chart Analysis. The time is just approaching 20 minutes past 7 local time here in Milan. Just charting up, to be honest, and I found Euro US dollar quite interesting, despite being in the shorts, currently held overnight. I'm open-minded enough to recognize when I'm potentially against or when I'm potentially caught offside. What I mean by that is a trade may have looked a certain way at a certain point in time. However, upon reanalysis of that, it looks slightly different. And I found Euro US dollar quite interesting. So much so that I figured I will make a short video about it. Just talking about the technicals. And as I'm sure you can recognize, I put a lot of effort into my technical analysis and I post them here on TradingView pretty much every day, as I'll show you guys here, some of which are private and some of which are public. But nevertheless, technical analysis is something that I guess it's quite sad to say that you kind of have to fall in love with it slightly in order to progress in the world of which is trading. So let me get to it. The DXY, first and foremost, that's really the basis, or I feel like currently that holds more weight, more so than the technicals, even so on Euro US dollar. Now, what I mean by that is I trade heavily with the use of higher time frame 50 EMAs. Now, looking at that weekly time frame, of course, currently this weekly candle is incredibly bearish. However, my strategy and my theory is based upon, well, if the previous weekly candle rejected that weekly 50 MA, I have every reason to believe and trust, until proven otherwise, that this current weekly candle will also do the same. Much like the most recent weeks, at some point in time, this candle was incredibly bearish. Much was the previous, and so was this one as well. However, what we can see here is that the weekly 50 MA did its job. It did its job to the downside. Price then broke, closed above. Price wicked down, and price then rejected to the upside. And it continued to do that, and now we're here. End of the week, Friday. We've got 17 hours and 38 minutes for this current weekly candle to look to reject its weekly 50 MA. Now, of course, on the lower time frames, intraday perspective, price does, in my opinion, look incredibly bearish, and there's every reason to believe that perhaps price could indeed drop to, let's say, the 98 region, of which there is a weekly order block there. Once that area is refined down, you can see in the bottom right hand chart where we have that daily order block refined, and we continue to refine those areas down. Nevertheless, at the moment, we're seeing that price is being held in a certain area. Now, for me, what I'm then looking to do is ask myself, well, why is price holding in that area? And do I have any reason to believe that price could well go long from that area? So what I do, I use the weekly time frame, and I've superimposed the wick imbalances from previous weeks. Top right hand chart, you can see that wick that price has now dipped into. Once that's superimposed, let's say on the 4-hour time frame now, bottom left hand chart, you can see how price wicked down perfectly and gave us that bullish engulfing candle, which allowed us then to use our order block selection by way of 4-hour order block, and we'll start building the theory up from that point onwards. And we take that to the 50-minute time frame, and if we were to look to trade the DXY, then we'd have a very capable position here, or position that could have been taken long yesterday, i.e. price coming into previous daily lows, or that region at least in and around the 15-minute order block, and price has now seemingly starting to push towards the upside. Now, the reason why I'm getting involved in that, or entertaining it, is as price on the DXY started making lower lows, lower highs, lower lows, etc., this move broke immediate structure, allowing me to then believe price, of course, once a high is created, expect that higher low for a higher high continuation. And you see here, in order for me to get some more confirmation today, I'd like some highs broken, pull back into an area of imbalance before going long. So that's really the description of the DXY. Now, the thought process behind this video was Euro US dollar, so let's get to that. So if we use the same sort of ethos that we've just spoken about on the DXY upon Euro US dollar now, and the mention would be that my strategy works across commodities, across Forex, across indexes. The process and the protocol is exactly the same. So now, Euro US dollar, we're looking incredibly bullish on that weekly time frame, but pay close attention again to how previous weeks were performing in relation to its weekly 50 EMA. It's very important. Again, thrown wicks to the high, what can we see? Price then closed below. Thrown wicks to the high, price closed bullish in inverting commas. However, price most importantly closed below that weekly 50 EMA. So again, although intraday perspective, we have very much so, or rather we are very much so bullish as a result of having 15.5 hours now on Euro US dollar on that weekly time frame to close bearish below that weekly 50 EMA. That's where my mindset is. However, looking now, and here is the true conflict, and here is what I found quite interesting despite being in the short position. If you pay close attention to that daily time frame, before price had broken and closed above that daily 50 EMA, I was very much so bearish on Euro US dollar. Now, yesterday, admittedly, I took a short position, although the previous candle, Wednesday's candle, closed bullish above that daily 50 EMA. Based on my DXY analysis, I still had reason to believe that we could indeed take a reversal short. Now, looking at it now, so on a Friday, we've now had two bullish candles close above that daily 50 EMA. What I had forecasted yesterday is that yesterday's daily candle could have pushed below that daily 50 EMA and closed below it, allowing us to have a pullback retest and short in line with that daily 50 EMA. Now, what we can see if I draw some illustrations, that here in the market was a clear structure point. That's obvious, and that's supported by the daily 50 EMA. As a result now of price actually breaking above, the analysis could well be flipped completely upside down from the higher time frame, from the daily down. And what I mean by that is price could well pull back into that daily 50 EMA before then heading bullish again. So that tells me that potentially I could be caught offside. I'm going to need to manage my position sooner rather than later to avoid being stopped out. So I'm currently not break even in this position as a result of needing to hold that overnight. Excuse me. Now, we can see that even clearer on the 4-hour time frame. If I bring that up slightly larger for us, it's incredibly obvious. The most recent low on the market on that 4-hour time frame was created here and circled. So after this low, I was expecting potentially a lower high for a lower low continuation. We didn't get that. We didn't get a higher high, but now what we have clearly is a break of structure. So after a higher high, I'm now expecting a higher low for a potential higher high continuation. Now, again, going clearly against my initial bias that I should be looking for shorts. Now, what we have on the 15-minute time frame, my reasons for entry, it's just my basic entry model, a snap of the most recent Asia. We've left a 15-minute order block behind up at the highs, refined within a 4-hour order block, of which was just a bearish engulfing candle that allowed me to actually select that order block, and I took a short position by way of sell limit from there, covering previous daily highs. So it's a very simple short position. Now, what we can see here is, based upon my analysis, is that if I was going to in fact, just take a step backwards, as a result now of actually making what I perceive, no, not quite actually, that's not quite a higher high. If price had indeed printed me a higher high, regardless of me being in that position or not, now any time price started to move away, I'd be quite concerned that we're in the realms of creating that higher high, higher low for now the higher high continuation. So the fact that I don't acknowledge this area as a higher high supports currently my shorts still. However, based on the higher time frames, that this move in itself is simply, now if I draw the 4 hour, is simply this, and any time price in this region now is pulling back, that could well be the higher low for the higher high continuation. So I just find it quite interesting, the technical analysis today. So what I'm getting at really is, although Euro US dollar, we have every reason to believe it could go short, I'm forecasting shorts, I still acknowledge that there is a possibility, not just based upon the trading gods, there is a possibility based on technicals that I simply just could be wrong at this point in time. And with that said, I recognize that my position is highly or heavily weighted upon the performance of the DXY. Now, if the DXY obviously looks to fill this gap, then Euro US dollar is going to continue melting. The reason why now I've got this area here in the market as a potential lower time frame turnaround is exactly what I've just explained based on that 4 hour. All of this leg being created at the moment could simply be that higher low creation for the higher high continuation. So I hope that's an insightful type of video that you're able to hang some knowledge onto. And with that said, if, for example, back to the 4 hour time frame, if price is going to make that higher low, I wouldn't be expecting price to make that higher low here as a result of not taking this move as a new high. So what I am expecting, if I was to look for a long position, which potentially I might take a long on Euro US dollar, based on the fact that, if the DXY is to push up into its areas, such as the daily 50 EMA around about here, then potentially we could forecast rejection. Now, the reason why I'm coming to that conclusion is based on the DXY. I recognize that my only real reason for looking for DXY longs is simply based on some fundamental knowledge, but more so the technicals. It's only based on the weekly 50 MA. And although the weekly 50 MA is part of my strategy, I recognize that this still could be wrong as a result of not being able to currently trade from any order block. So I wouldn't ever just trade from a higher time frame 50 EMA. I like to have the support also of an order block. And as you can see, currently in that or on that weekly time frame, there isn't a weekly order block that I am hanging my position long on the DXY upon. What we do have, of course, down at the lows, bottom right hand chart, you can see we are still operating within the realms of a daily order block. But what must be said is this daily order block is very much so mitigated. It has been used. But while I'm here, I can still see a support for continued longs on the DXY. Have a look at this. Higher high, higher low, higher high. As a result of the gap, we haven't really made a clear break of a key structure point. So, but for this gap, we would still be in and around this area looking to create potentially what could be a higher high. So, as I said, just found it very interesting this morning. Chart analysis, it becomes second nature. but from time to time, the pairs throw up something interesting, and I figured why not make a nice educational video upon it if you find it of any benefit whatsoever. So thank you very much for your attention, your support across all the channels. I do appreciate it. All of the comments, good and bad. I'm here for them all. And let's see how Euro US dollar performs. I'm also short AUD US dollar as well, pretty much based on the same theory, but for it's not so much the EMAs that led me to take the position. It was more so structurally on that weekly time frame as a result of having that break below this area in the market. And again, just using basic structure. Once we had recognized we were just range bound, we made that first low by way of bearish engulfing candle on that weekly time frame. After we've made that low, expecting the lower high for the lower low continuation. Now, of course, we're running into the same types of errors here. Well, not so much errors, but potential hold-ups as a result of price clearly now breaking and closing above the daily and the 4-hour 50 MA. So certainly in terms of management, I'm very realistic to understand once price gets towards that 4-hour 50 MA, as you can see my alert is in around these areas, I'm going to have to manage that position. Also, having the expectation on the weekly that I do feel that price could still roll short down towards that weekly 50 MA, again down towards the order blocks. I'm heavily short biased on AUD USD despite having these EMAs against me. Nevertheless, what I do or what I must or what I'm required to do is manage my position by the EMAs, because again, if we use the most basic level of structure, we had a low created in the market expecting a lower high for a lower low continuation. We didn't get that, so therefore this could well be on intraday perspective, or it certainly is on intraday perspective, the first high created, and then we've made a higher high. After a higher high, of course, we're expecting a higher low, higher high potentially to be created. So I recognize the position that I'm in could be in quite risky territory at the moment. Nevertheless, based on my analysis on the DXY, based on using Confluence as well on Euro US dollar, that's why I was comfortable to take that position. So nevertheless, also AUD USD currently not break even, but we'll have to manage that position at some point. Again, thank you very much for listening. Apologies that you had to bear with my allergy-stricken voice mixed in with summer flu. I have no idea what I've done to deserve that, but nevertheless, team, thank you very much for your attention. I do appreciate it. All the very best in your trading journey. Speak to you soon. Charles.